Bottom line, folks, we got a man right now that does take action on his ideas. We got a special treat for you. We got our man, Mr. Rob McEwen. Rob, of course, has been on TFNN many times. Rob is the chief owner of McEwen Mining that trades on the NYSE MUX. Rob McEwen, welcome back to TFNN.
Thank you, Tom. Great to be here.
How you been? Good?
Excellent.
Good. That's a beautiful thing. So let's start off. I actually talked to you last year, but bottom line, tell us first off, what do you think about the metals market in general, Rob?
It's turned. We're at the beginning of a bull market that started in 2016. It's invisible to everybody right now, but it's shown strong gains since the beginning of 2016, and it's just the start. It's going much higher. Yeah,
this consolidation has been a long consolidation. There's no doubt about that. Now, let's talk about, you get a lot of good news at McEwen Mining. Tell us what's been going on with McEwen Mining.
Well, we're growing. Production we expect to increase about 40%, better than 40% between the end of 17 and the end of 18. We're building a mine in Nevada.
Yes.
The Gold Bar mine, and we expect it to be up and running at the end of the year. There's some financing the prospect of financing was overhanging the market, and we've addressed that. We'll have the balance of the funds in by the end of the quarter. It's a debt financing. It's not convertible. It doesn't have any sweeteners, warrants, options, metal streamings, or royalties sold. I'm taking down half of the issue. It's a $50 million issue, so my investment in the company, after I take down $25 million of the $50 million of debt, my investment will be $160 million in the company.
That's pretty amazing. And right now, folks, Rob is known for this, but right now, Rob, the number I have is that you own basically 24% of the company, 79 million shares. That's even before the financing, right? Yes.
Yes.
Pretty cool. So here, tell us, it seems, when I'm looking at these numbers, Rob, right, like I'm just looking at the last quarter versus this quarter, and you're talking about growth, but this is some pretty cool growth. I mean, I guess you did 41 million in gross last quarter, but when you go into next year, every quarter is like at 42 million. Would that be correct? That's the estimate?
Yes, we bought an asset in October of last year called the Black Fox Complex.
Yes.
We bought it from McEwen Mining. We basically paid 6 cents on the dollar. They'd bought it in 2014 and put monies into it. They were into it for $560 million, and we bought it for $35 million.
Amazing.
And so we have a $15 million exploration program there this year. It's 100,000 meters of drilling. And already the results are starting to look quite promising. There's a mine there producing 50,000 ounces of gold. There's over 1 million ounces in resources. There's a mill with excess capacity that complements the properties we bought 4 months before that, also in the Timmins area. And what wasn't really showing when we went to buy it, there's $190 million of tax pools, which means we can shelter that amount of future income, assuming we make this profitable. So,
in your industry, it's really intriguing that when you can get such an, well, first off, I guess there's not so many mines, but there's so many mines that want to get basically ore out of the ground that a huge amount of money has come into. Did you get the deal that less expensive because of the fact that gold had come down from the 1900 to the 1200? How did that work?
Absolutely. It was a less attractive asset. The mine is higher cost.
Yes.
So people thought, well, it's got a short life, appears to have a short life, and it's high cost. Why buy it? We looked at it and said it's very complementary to our other assets. We think we can turn it around, and it has a big land package in one of the best gold districts in the world. So there's good exploration potential.
Now, if you can you explain to the folks the countries that you're doing business in right now?
Yes, we're in Canada in the Timmins Gold Camp, and we're in Nevada in the Battle Mountain Cortez Trend, about 30 miles on trend south of Barrick's largest gold mine in the world. We are also in Mexico in the Sinaloa State, where we have a gold mine and a silver deposit we're looking to develop, and we're in Argentina. So Nevada's big gold district.
Yes.
The area in Argentina that Santa Cruz province is one of their larger gold producing areas. And we also have in Argentina a very large copper deposit that gives us a lot of optionality to copper.
Yeah, the copper price has stayed up. It's really intriguing how that is working out. What is one of the biggest challenges, not just in the mining business in general right now, Rob?
The biggest challenge right now is gaining investor interest, because the capital markets provide much of the capital for the growth in the industry. But I would say that the government, America is becoming a much better place to look for building a mine because of lower tax rates and streamlining of the regulations. Other parts of the world are a little more uncertain. Taxes are going up, and in some parts of Africa, people are taking larger percentages of your property.
Yes. Now, do you mind? We got a quick break. Can I take you to the break? Is that cool?
Of course.
Awesome. Stay right there, folks. Rob and I are coming right back. We're talking about McEwen Mining. It trades on the NYSE MUX. You can go to the website, McEwenMining.com. Rob and I are going to be coming right back. We have the Dow Industrials right now down 203 points. You get the NASDAQ off 8. S&Ps are down 14. Rob and I are going to be right back. Welcome back, folks. We're talking with our man, Mr. Rob McEwen, who is the chief owner and chairman of McEwen Mining, trades on the NYSE MUX. You know, when we're talking gold, Rob, right, and, you know, it's so intriguing. You've been in the gold market forever. I've been in it maybe 15, 20 years. The currency, Bitcoins, right? You know, when you see what they did, I was scratching my head like, okay, man, you know, gold has not, you know, gone up exponentially, and then all of a sudden we get Bitcoin. Do you think that whole digital currency has taken any market away from gold?
I think it's going to increase the market for gold.
Okay.
The Bitcoin had the appeal of being digital.
Yes.
It appealed to a different generation. It was unregulated, and the market was not transparent. With Bitcoin getting listed on the COMEX, and more government saying, look, we want part of this,
yes,
some of the money is going to come out of Bitcoin and look for some hard assets. The Bitcoin phenomena is a reflection of the enormous amount of money that's been pumped into the system globally by the central banks around the world. And it's just a big reflection of the speculative aspect. I mean, you could look at contemporary art, you could look at real estate,
yes,
and Bitcoin.
Yeah.
They're all symptomatic. And if we see some distress in the economies of the world, gold is going to come to the forefront, and I think we'll see some amazing runs in the price of gold and silver.
Yeah, I'll tell you, you know, when we talk about interest rates a lot around here, you know, particularly because when we look at, you know, the 10-year in the U.S., the bottom line is that, yeah, it was approaching 3%. What was always blowing my mind is that, okay, they're lending money to Italy and Spain at 1.5% on a 10-year basis. Now, that changed 2 days ago, but it was like, how does this work? So it's so intriguing that, you know, there is so much money around the world. I'm still scratching my head about why, you know, people would basically give their money to Italy and Spain at that particular price in general.
Let me give you a crazy example.
Cool.
In 1987, when the stock market crashed,
yes,
homestake mining was 4.5% of the total market capitalization of all the companies on the New York Stock Exchange.
Wow.
And Homestake no longer exists. It got taken over by Barrick.
Okay.
But Newmont's the only gold stock on it right now, in the S&P 500.
Yes.
And it's $21 billion. And it represents 0.08%, or 0.08% of the value of the $26 trillion
Wow.
combined market cap of the New York Stock Exchange. So if you said we went back to 4.5% value for Newmont,
Yes.
or gold, that would mean we'd need 55 additional companies the size of Newmont, because we'd need $1.2 trillion. So when you talk about Bitcoin and the excitement happening there,
Right.
you can see something like that happening with gold.
And, it's a huge point. Where my head always goes, which I relate to the listeners, is that, okay, so take basically 10 tons of dirt, and you might have 1 ounce of gold. And every time I put that in my head, it's like, really? 10 tons, 1 ounce, right? And that's a good mine, right?
Yes.
Yeah, pretty amazing. So let's go back to McEwen Mining for a second, right? I was really happy when I saw that the aspect that you were doing that $50 million note, right? Where I'm still scratching my head a little, and I'm sure you've seen it, right? We got a 19.4% short position inside McEwen Mining. What do you think that's all about?
That short position was driven, I believe, by a couple of factors. One, the money to complete the build of our Gold Bar property.
Yes.
Mine. People were looking and saying, okay, there's going to be an equity issue. It's going to be done at a discount to market. I'm going to short the stock and buy cheaper stock and cover.
Yes.
That's not happening now.
Right. No, yeah, I'll tell you, most of the time when I do the gold report, it's really early in the morning, 5:30 in the morning. And when I saw that come across, they did the note, I said, oh, this is sweet. Because what happens, folks, is that not only just people, the broker-dealer community can run out in front of these. I mean, you don't supposed to, but the reality is that it happens, So, and when I saw that come across, I says that's a good situation. There's no doubt about that. And so that construction, will end up happening. What you'll close on that in the next few weeks, and then you'll start constructing the rest of that construction.
We've already started construction. This was just our treasury had about a $35 million shortfall to complete the construction. We got our permits the beginning of November.
Yes. And
we started immediately thereafter. So we're about a third of the way through already, and we just needed some money for the third quarter for some of the heavier pieces of construction, and we'll have this mine built before the end of the year and commissioned in the beginning of next year.
When we take a look at if we swap back to the metal market again for a second and talk about whether it's the dollar, whether it's the pound, whether it's the Canadian dollar. It seems, our dollar's been getting stronger. Bottom line, went to this December swing point. We'll see whether it stays or not. But when you actually do a look at fiat currencies, they still seem over the course of years that they are getting weaker in correlation to what an actual metal is.
I saw a chart recently. There's a report comes out of Liechtenstein called Incrementium, a research house, and they were plotting the world price of gold. It's sort of a weighted average of all the major currencies.
Okay.
And it was just showing how we were approaching the all-time highs for gold. Because if you look at the price of gold in other currencies since the beginning of 2016, when I believe the bull market started.
Yes.
In Argentinian pesos, it's up over 100%.
Ooh.
In Turkish lira, it's up over 90%.
Yes.
In dollar terms, it might surprise a lot of people that since the beginning of 16, it's up over 25%.
Right.
There's been gains in the market if you entered in the beginning of 16 or later that are quite impressive.
No doubt.
No one's really looking at it. And gold in 2017 was one of the better asset classes in terms of performance.
Yeah, you know what I thought was impressive is that, just, since April that we had come down, the equities didn't get hit. Not like they could get hit, Pretty amazing, no doubt. Well, listen, it's always a pleasure having you on. We appreciate the update. I really appreciate the aspect that you got the note offering done and you put in the $25 million, and I'm sure we're going to be watching that 19% shot interest basically get dwindled away. And all we need to do is wake up next week or the week afterwards when Italy is on the basically hook again, and we might get gold up $50, and then, as they say, see ya, don't want to be ya on that short position.
Exactly, Tom. If I could leave you with one thought.
Yes.
For your listeners, that the risk of not owning gold is greater now than the risk of owning gold.
No doubt. Thanks so much, Rob. Have a great one. Have a safe one.